Tesla stock is having a huge day-to-day, up 3%, well outpacing the broader markets and breaking above key levels of resistance. And there's actually a lot of Tesla news, not small news, but huge news that is causing this. There's specifically 4 different things that you need to know. First up, Goldman Sachs' Mark Delaney says Elon Musk could sell at least 100,000 new lower cost models next year, and Tesla has over 50% share of the US EV market. He goes on to say that at Tesla's annual shareholder meeting on June 13th, Tesla revealed a slide showcasing current and future products, including 3 vehicles under covers that hinted at their body shapes. According to Goldman Sachs analyst Mark Delaney, Tesla suggested that one of these could be a smaller version of the Model 3, another might be a van or a larger version of the Model Y, and the last could be a robo-taxi. He says, quote, as new models and variants fully ramp, we'd expect them to add at least 100,000 to Tesla's annual volumes. This comes after Tesla previously announced that they would begin shipping these new models as early as late 2024 or 2025 with a new updated approach. The cost of its next generation platform by 50%. According to analyst estimates, achieving about a quarter to a third of this target would result in approximately $5,000 to $7,500 of cost reduction per vehicle when scaled to higher volumes. Goldman Sachs anticipates that a lower cost, smaller version of the Model 3 will fall within the $25,000 to $35,000 starting price range. This model is expected to compete with the Volkswagen Golf and Ford Escape/Kuga, which sold about 200 to 400,000 vehicles annually in 2023. Goldman Sachs goes on to say if Tesla conquers a further 1% EV market share, it could add 300 to 400,000 vehicle sales. On a trailing 12-month basis, Tesla has over 50% share of the US EV market, mid-teen share of the EV market in select European countries, and high single-digit EV share in China. In 2023, Tesla shipped approximately 1.8 million vehicles, and the company estimates its current factories have a maximum potential capacity of close to 3 million vehicles per year. Goldman Sachs projects that Tesla will ship 1.785 million vehicles in 2024. However, the outlook could improve significantly in 2025 if new vehicles and variants successfully penetrate new markets. And again, according to Goldman Sachs, just gaining a 1% market share in the US, Europe, and China with these mainstream models would increase total volumes by 300 to 400,000 units. Despite these optimistic forecasts, Goldman Sachs maintained a neutral rating on Tesla stock with a 12-month price target of $175 per share. Delaney believes Tesla is well positioned for long-term growth given its strong standing in the EV and clean energy markets. However, he cautioned that weaker market conditions could potentially impact earnings in the near to intermediate term. It's important to remember that these price targets that analysts give are 12-month price targets. So he's saying we're really bullish on Tesla longer term, but the next 12 months, maybe it just stays around this price. Next up, this article from investors.com says Tesla stock rallied above a buy point Wednesday as Stifel initiated coverage of the EV giant with a buy rating and a $265 price target. Stifel backed up its buy rating and $265 Tesla stock price target Wednesday on the belief that a revamped Model 3 and upcoming Model Y refresh could bolster EV sales. The firm wrote it believes Tesla is well positioned to deliver multi-year growth in 2025 through 2027. Stifel also says Tesla's full self-driving or FSD and robotaxi autonomous driving efforts have the potential to generate significant value through sales and possible licensing agreements. The bullish note comes a day after Tesla recalled more than 11,000 of its Cybertruck vehicles due to windshield wiper issues and improperly attached trims. Next up, last night it was reported that Rivian secures up to $5 billion from Volkswagen with their stock soaring more than 50%. Today, Rivian is up still about 30%, and basically what this is, if you read here, Volkswagen is expected to use Rivian's electrical, architecture, and software stack for vehicles beginning the second half of the decade, according to Scuringe. He said the joint venture does not include anything with battery technologies, vehicle propulsion platforms, high voltage systems, or autonomy and electric hardware. So basically, they are going to create electrical architecture and software technology together. And last but not least, you have Nvidia and some of your other semiconductors that are selling off quite a bit. Nvidia currently down about 2%, unlocks, if you will, a lot of value, money, market cap, whatever terminology you want to use, to go into other areas of our market. So we've seen this correlation many times before, where if Nvidia is down, Tesla tends to be up. They tend to inversely correlate each other because Tesla is a big tech name, and when Nvidia is going higher, funds almost have to own Nvidia because they can't underperform as Nvidia just continues to soar. But when Nvidia sells off, there's not as much of that rush to go buy Nvidia, so some of that money goes into other areas, and Tesla has been a big beneficiary of that. And I mean, with the recent slide you've seen in Nvidia stock, Tesla has been ramping higher, so they've directly been inversing each other as of lately. It is also being reported that Tesla China is rehiring some sales staff amid Q2 2024 delivery push. Holmar's catalog wrote on X about 11 hours ago, "From now on, I am on a hunger strike until FSD 12.4 is released to the people." Elon Musk says 12.4.2 is much smoother. The challenge is keeping safety high while increasing ride comfort. Build moves to internal testing tomorrow. And we have a construction progress update on the huge fans Tesla is installing at Giga Texas for the company's new GPU data center cooling system. And you can see just those huge fans. It looks like they're almost fully put together, from what I can see. This article from the Business Insider was wrote last night and titled, "Tesla still has one massive leg up on every automaker." Tesla's input cost per vehicle, the amount the company spends on components like metal, glass, battery packs, wheels, and tires, averages under $30,000 a vehicle. A new Analyst from Bank of America found that's $17,000 cheaper than non-Tesla EV component cost and about $10,000 cheaper than the industry average, including Tesla, the bank's analyst estimate. Even as Tesla's margins shrink and sales slow, the lower input costs keep Musk ahead of his legacy competition. Companies like Ford and GM are relying heavily on their gas-powered profits to fund their electric ventures. Neither company has turned a profit on its EVs. General Motors Cruise robotaxi unit has hired Mark Whitten, formerly of Amazon and Microsoft's Xbox video game platform, to be its new CEO. Apparently, some people have started receiving their $450 Tesla Mezcal in the US. It's an alcoholic drink that is smoky and floral with a smooth finish. I don't have mine yet, so let me know down below in the comment section if you have gotten yours yet. The CEO of XPeng said this about full self-driving. He said, quote, "China's roads are more complex and have more people and traffic than the US. I'm looking forward to the performance of FSD in China. Quote, we look forward to inviting Elon Musk to China and promoting the popularity of smart driving together through more exchanges across the industry." Option activity today is coming in very bullish for Tesla stock, specifically a lot of option activity around the October 18th option expiration and around the 235 to 285 call range. And let me just tell you, if Tesla stock is anywhere near those prices by October, that's going to be a pretty dang good summer/fall. Here you can see, according to the interesting flow sentiment over on Ortex, you have 7 different orders, trades totaling $6.34 million with a positive order value of 67%. If you take a look at the volume today, 65.45% of which is calls, 34.55% is puts, so you have almost a 2-to-1 ratio, 2 times as many calls compared to puts being bought today. And here you can even see Tesla stock is breaking out big time, now up over 4% and above $195 per share. It looks like you're starting to get a bit of a short squeeze going on in Tesla stock. And let's take a look at the data, because as I have reported many times here on the channel, the short interest is out of control. And if you do see Tesla stock make any kind of sharp move higher, shorts are in trouble. So if we actually take a look today, the data is representing what I just said. You have covered shares of 4.1 million today and borrowed shares of 124,000. So on net, you have 4 million shares that are being covered today. That's a lot. That's a lot. That's the most I've seen in a long time for Tesla on any given day. And it's not being offset by a lot of shorting pressure. So it's like straight buys going into Tesla stock today. And I believe if you've been holding Tesla and you wanted to sell, you've probably already sold a long time ago. My personal opinion. Let me know what you think down below in the comment section. You do have short interest off free flow at 3.68%, $19.09 billion currently sold short in the stock, with 102 million shares that are currently sold short. Sentiment over on StockTwits for the SPY is bearish today at 36. That's actually more bearish than you were yesterday at 39. Tesla's sentiment score is 63, which is bullish. Yesterday, you were extremely bearish at 19. Pays to be bullish on Tesla at least sometimes. Message volume is high today at 56. Yesterday it was normal at 51, and the participation ratio today is normal at 54. Google Trends data today for the Tesla lineup is not doing a whole lot of anything, actually down ticking a little bit for the Model Y, going from 30 to 27, the Model 3 going from 28 to 24, the Model S and the Model X both falling about 1 point apiece, the Cybertruck staying flat at 75. Still very good levels of search trend interest, seasonally abnormal levels of search trend interest we have seen throughout Q2, and that does likely lead to better than expected overall deliveries, and that's my expectation. Google Trends data for full self-driving is sitting today at 20, which again is still good numbers, still higher than where you were sitting in the mid to low teens for really every other time over the past year. CNN's Fear and Greed Index today is moving up a little bit from 39 yesterday to 42 today. Really, most of this increase you are seeing on the S&P 500 today, if not all of it, is from Apple being up 2.5%. And I think Apple's very problematic as well, not just Nvidia in terms of valuations and expectations. Apple at 215 starting to look like expectations are too high, and that could be another problem area as we do get into earnings season, and especially the next quarter earnings. And you can see yet again today, it's a very narrow market. You are hitting a fresh new low for the percent of stocks above the 50-day moving average since at least the spring of this year, around mid-April or so. You now have the percent of stocks above their 50-day moving average only at 35.5%. So 65% of stocks are currently in an active downtrend in our markets. That's not very strong, considering the S&P and the NASDAQ are pretty close to all-time highs. And at this point, you're either looking for a catch-up, where the rest of the markets start to catch up and do better than big tech, and starts to, match some of the rally that we've seen, or you get a catch down, and that's where big tech comes down a lot of the time in a pretty dramatic fashion. We do have some earnings today in after hours, but one company specifically to pay attention to is Micron. Micron signed a deal with NVIDIA earlier this year to start putting their components into NVIDIA chips. So Micron and NVIDIA at this point, they're going to be seen as sympathy trades. So if Micron has good earnings, beats on guidance, so on and so forth, then NVIDIA is also going to do well. The entire AI trade will do well. If Micron does not do well, then that's going to lead to further selling in NVIDIA and other semiconductors. And let me tell you right now, everyone is watching Micron because it's the first real semiconductor or, AI stock in general that is reporting earnings so far. So this is going to give us the first heads up to maybe what Nvidia numbers might look like, or SMCI, or Intel, or other, AI companies. Here on the day today, 10-year treasury yields are actually up about 7 basis points, which is quite a large move higher. Today, you did have new home sales that came in weaker than expected, like a lot weaker than expected. New home sales for the month of May coming in at 0.619 million. You were expecting 0.65 million. New home sales month over month just plummeted, negative 11.3%. You were actually expecting a positive 2.9% number. So that was not even close, not even in the same ballpark as the number that we got, showing real estate, at least transaction volumes, are slowing down even more. Later today at about 4:30 p.m., you are going to get the bank stress test results, and that could be interesting considering the FDIC just added 63 more banks to their problems list. Now, the stress test is for banks, I believe, that are over 200 billion in assets under management. So a lot of those banks are not going to be in that problem, category. In fact, none of them should be. But if there is banks that fail this, then that will obviously be a problem for those specific banks. Unless we were to see, a lot of banks fail, I don't think it'll give us a market reaction. But considering we did have a banking problem, if you will, crisis, kind of, for like 2 seconds last year in the spring, a little over a year ago now, that will be something to watch for. But again, it's all about Micron here in after hours heading into tomorrow. Micron is flat on the day today, but you have went through a pretty parabolic rally ever since Micron's last earnings, going from about $90 per share up to a high of $157 per share, still sitting at $141 per share heading into their earnings. You've still rallied a lot since last earnings, and we'll see. The expectations are kind of on the high side, but I mean, it's weird because Micron's business slowed down so much in 2022 and 2023. You're actually not expecting like record revenues or anything along those lines. You're expecting about $6.7 billion in revenue. Micron's record is $8 billion in revenue back in 2021. So you're actually not expecting a great quarter from Micron historically speaking, but maybe that could set you up for a beat. The expectations on Wall Street, though, are for guidance to come in at about $8 billion, which would almost be a new high for Micron's business history. So it's really the expectations of a really good quarter that has pushed Micron higher, a good quarter for next quarter, that is. So we'll see how the whole AI trade is going, how GPUs are going. I'm a little concerned, but I do think Micron's probably going to pull a rabbit out the hat and give us some good news. So we'll see here in just a couple of minutes, and we'll be back to break down those results later on tonight at 8 p.m. Eastern Standard Time. On a technical basis, Tesla stock broke right through its 188 level, which is that level of resistance we have seen for a while now. Now you're really in purgatory between that 188 level. We'll see if that holds as support. It should now. And that will be great. If you just fall under 188 over the next coming days, that's going to be like a slap in the face. Like, this rally didn't mean anything. So we should hold support at that 188 level. Tesla stock looks like it wants to break out higher, so I wouldn't count Tesla out here. But I'm not expecting too much of a rally until July 2nd. And in fact, the more that we do rally into July 2nd, the more likely you are to get downside from the actual delivery numbers. Now, Tesla's trying to make this quarter end push, so we'll see where the number ultimately comes in as. Current Wall Street estimates are about 236,000 deliveries. The investor compiled estimates are going to be lower than that, probably around 410, 415,000 deliveries. And I think it'll be pretty easy to beat that number. Probably, again, still coming in between 440 and 450,000 deliveries. And overall, I am expecting that to be a positive for Tesla stock, because last year in the same quarter, Tesla delivered 466,000 vehicles. So if you come in at like 440,000, 460,000, 450,000, that's not too negative. and I think the markets would get over that fairly easy. Next big level though is $200 to break out above, and then your 200-day moving average at $207 per share. If you take a look at the RSI is taking a sharper move up today, now at 64, which is definitely bullish, not overbought, but definitely starting to get a little bit close to that following the last couple green days we have had in Tesla stock back to back. And you do have a MACD that is continuing to curl higher, which is again another bullish sign. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.